Kingville Insurance. Remember ethics. Kingville Insurance. You are in good hands. Kingville Insurance. Ensure what matters most. Kingville Insurance.
Hi, welcome to today's session where we'll be giving you some insights on insurance. I'm Peter Masharia from Kingville Insurance Agencies, and I'm joined here by my client and good friend, Patience Mulondo. Welcome, Patience.
Thank you, Peter. I'm Patience Mulondo, a quantity surveyor, and today we are on a site managed by Landmark Holdings Limited, and I'd like to thank them for giving us this opportunity to use their space for today's feature. Thank you.
Thanks, Patience. And it's good to see you in a hard hat finally. So, as we had discussed last week, we are going to be talking about the contractor's all risk, and that is why you can see we are in this kind of setup. So, Patience, tell me what would you want to know about the contractor's all risk?
First, I want to know what is all risk, and is there an all risk policy, or does it only relate to construction?
Okay,
yes,
that's a great question. And there is an all-risk policy. It's a policy that can be taken up on its own.
Yes.
And it is called an all-risk policy because what happens is it covers everything that is not excluded. So that's why it's called an all-risk policy. As long as it is not excluded on the policy, it is covered. So you could say, for example, I take up a domestic insurance, and within it there is an all-risk section. And this section does not exclude flood, specifically not excluded. So it basically means in case of a claim, the flood will be covered. Any cost related to the flood is covered. Okay. So it's a very broad cover.
Yes.
That ideally, unlike the others where it has a specific peril like fire, burglary, this one it covers everything other than what is not mentioned on the policy as an exclusion.
Okay.
Yes.
Okay.
Yes.
Nice. So now we can jump into contractors all risk policy.
Yes.
What is that?
So as the term all risk, it basically means it covers contractors for any works that they are doing and any risks associated with that project that is not excluded.
Okay.
So basically what that means is it will cover the structures in terms of either damage to the structure by a certain period. It could be theft of equipment within the site. Basically anything that is not excluded is covered.
Okay.
So here we are talking about the workmen on site,
yes,
the equipment on the site, the structures on the site, anything, any peril there is covered.
Okay.
Yeah, so it could be fire, flood, any peril that relates to a construction site.
Okay.
Will be covered.
Okay.
And it is taken up by the contractor.
Yes.
Yes.
So you just said it's taken up by the contractor.
Yes.
And it's a contractor's all risk policy.
Yes.
Is it limited to a contractor?
Ideally, yes. Because it is specifically for contractors.
Okay.
So me as the owner of the building,
yes,
or as the owner of the project,
yeah,
I cannot take it up because I'm not a contractor.
Okay.
So what will happen is I will need to ensure that the contractor whose building has that policy in place.
Okay.
Yes.
Okay.
Because it's specifically for contractors.
Okay.
So whether you're building, whether it is a site, whether it is a road, a bridge, any kind of construction, the person who's in charge, who's doing the construction, the contractor,
yes,
is the only one who can take it up in Kenya.
Okay.
However, in other areas,
yeah,
in other countries, you'll find banks that are financing the construction. The owner of the project can take up this policy, but in Kenya, it is specifically for the contractor.
Okay.
Yes.
That's good. That's clear now.
Yes.
So, how do you determine the limit of a policy?
Okay.
Yes.
Now, the limit of the CAR policy is one determined by the cost of the project,
Yes.
the duration of the project,
Yes.
the materials that will be used. So it's a very the premiums or the cost is determined by the project. Would you call it proposal?
Scope.
The scope of the works.
Yes.
Yeah. So whatever it entails,
Yes.
in terms of the cost of setting it up, in terms of the materials that will be used, in terms of the personnel. So it's a very it's tailor-made. Let me put it that way. Usually tailor-made as per the project.
Okay.
Yes.
Okay.
Yes.
I've seen some contractors have one policy
Yes.
for all their sites.
Yes.
Is that okay?
Ideally, no, because the projects have different terms.
Yes.
So you'll find like the contractor's all risk is based on the term of the project, and it's usually for 1 year. So you find like, assuming this site is, maybe the cost of this site is maybe 100 million, and it is going on for 2 years. Then you have another site that has totally different dynamics.
Yes.
So, because the CAR is ideally it's per policy. So it will basically mean each site needs to have its own policy. Yeah,
Okay.
because the scopes are different.
Yes.
Yes, you
Okay.
find here maybe a risk that is covered here is not covered on that site
Mm.
because it's not required.
Yes.
Yeah, so ideally each project should have its own policy.
Okay.
Yes.
So, just in case all more than one site
Yes.
is covered
Yes.
in a policy,
Yes.
what would I look for
Yes.
to ensure that my site
Yes.
is adequately catered for
Okay.
in that cover?
Okay.
Yeah.
The thing to ensure is that the scope of works
Yes.
within your site
Yes.
are captured in there.
Mm.
So whether it is maybe it could be the materials, it could be the contractor's staff and equipment
Yes.
need to be fully highlighted on your policy
Mm.
to confirm that it is captured well, so that in case of a claim, whether it is related to the damage of the building or to equipment on site, you can be adequately compensated, or the owner of the project can be adequately compensated. There is
Okay.
no loss in terms of time, in terms of resources already used in the project.
Okay.
Yes.
And what about under items that are covered?
Yes.
Is negligence covered? Any contractor's negligence, for example,
Yes.
maybe they misinterpreted a drawing,
Yes.
and what comes up is not what the architect
Yes.
or the client had in mind, and there has to be a rectification. Would that be covered?
That's a good question. Ideally, negligence in any policy is not covered,
Okay.
because ideally, with insurance,
Yes.
the first there's a duty that is put on the insured to ensure that a claim does not occur.
Yes.
So in any kind of, or to prevent a claim from happening. So negligence is actually like an exclusion,
Mm.
because what it means is you did not do your due diligence
Mm.
to stop a claim from happening.
Okay.
So that ideally is not covered.
Okay.
Yes.
Uh,
Yes.
And we've also, in the industry, we've noticed that insurance sometimes we have issues with them settling claims
Yes.
when problems arise,
Yes.
and they're not always negligence related.
Mhm.
What causes this? It's getting to a point where sometimes you prefer to go to a bank
Okay.
to get some of these covers,
Yes.
because they're most likely to give the client better protection
Yes.
than an insurance cover.
Okay.
Yes.
Okay. You know what happens with insurance is, I think the most important thing are the terms. So when you're taking up an insurance policy,
Yes.
it's very important to spell out what you need covered. Because you see, like an all risk policy, what it does, it covers everything other than what is excluded on the policy.
Yes.
So it's very critical when you're taking up this cover to say, I want this and this and this to be specifically covered.
Yes.
Because sometimes you'll find with the all risk policy, because it's very broad, you'll assume all risks are taken care of.
Yes.
But then when a claim happens and you go to the policy, you'll realize that is one of the exclusions. So you see, it's very important before you sign up for this kind of policy, you ensure that that specific risk is covered.
I have one more question. In the cases where we have a number of projects under one policy,
Yes.
and the contractor gets a new project and would like to include it in that policy, what would be the procedure?
Okay. Ideally, because you already have an existing policy
Yes.
that has many projects in it, what will happen is the terms of that new project can be added on, but will be covered until the expiry of this policy.
Okay.
Yeah, and then so it will be like you can pay what is called like a pro rata premium for the period of this policy until expiry, then it can all be covered together. But the challenge with that is, you see, these projects have different completion dates
Yes.
and different scopes of cover. So my advice would be to ensure that each project has its individual policy.
Okay.
That way you're clear that, because you know what the challenge with having everything in one policy, it's a standard policy that will cover all the projects, yet these projects have different scopes, different risks, different costings. So my ideal advice, or my best advice would be, if possible, it's tedious where you have many policies, but it's the best.
Okay.
Yes.
Wow.
Yes.
Thank you. Is there anything else you'd like to add on?
Just to maybe clarify other things that are not covered in the contractor's all risk. As we had mentioned, negligence,
Yes.
wear and tear. So if maybe there's an equipment that is insured in the policy that gets damaged due to the normal work,
Yes.
that is usually not covered.
Okay.
And then war-related risks. So we talk of war, terrorism, invasion. Those kind of things are normally not covered under any kind of policy, including the all risks.
Okay.
Other things that are not covered will be the acts of God as well. But earthquake, floods, those are normally covered under some of these policies. Like this all risk, it will cover that.
Okay.
Yes.
And what about the contractor's performance?
Now the performance, that one is normally captured under a different type of policy,
Yes.
which is called the performance bond.
Okay.
And ideally that one is taken up when you're signing the contract.
Oh.
Or before you
Yes.
sign the contract, the contractor has to have a guarantee
Yes.
that when they're paid some bit of money, they'll not run away.
Yes.
They'll perform their duty.
Yes.
Yes. So the performance bond is done differently.
Okay.
Yes.
So does it also cover the contractor's performance and any monies received to facilitate mobilization on site?
No, this cover is specifically in terms of material, the contractor's risk. It does not. For that, you will need to take up a performance bond.
Okay.
Yeah, and that one is taken up separately.
Yes.
And then for payments that are made in advance, there is advance payment guarantee. It's taken up to ensure that when you pay the contractor, they don't disappear with your funds.
Okay.
Yeah, so those are two separate policies.
Thank you, Peter, for enlightening us more on this contractor's all risk policy and touching a bit on the performance bond and advance payment guarantee.
Yes.
I hope it can also help clients make informed decisions when insisting that contractors need to take up these policies for their own sake and for the project's sake as well. And I'd also like to thank Landmark Holdings Limited for giving us this opportunity to have the interview on site.
Thanks, Patience, for organizing all this and being such an interesting person to discuss this week. So, ladies and gentlemen, as you've heard, today we are talking about the contractors all risk. See you next week as we talk about the business combined insurance.
Insurance, your peace of mind, our concern. Kingville Insurance, service with integrity. Kingville Insurance, a better way of life. Kingville Insurance.